We want to hear your background. Founder and CEO of Arkham Intelligence. How did you get to this point, and what does Arkham do today?
Yeah, totally. Thanks for having me on the show. So I started the company back in 2020. We first incorporated it in January of 2020, just before the pandemic started, basically with a vision towards bringing significantly more transparency to the crypto space. Now, I've always sort of understood and, believed in the narrative that cryptocurrency industry as a whole was incredibly transparent. And it is true that a lot of the data surrounding cryptocurrencies and the blockchains that they're built upon, they have a lot of publicly available information. They have a lot of public data. But part of the issue is that it's incredibly hard to understand that data and see what's behind it. And so I felt that there was a really big need in the market for a product like Arkham. And from there, ended up recruiting a co-founder, building an initial team, raising money, and taking a product to market.
Fantastic. How long has Arkham? How long? When was Arkham founded?
Jan 2020, so it's been almost 4 years now.
Fantastic. And I have to ask. So from Jan 2020, that is pre-COVID, just by about 3 months or so, to now. Now it seems like the topic is inflation and all these other macro narratives. I know this is going to be a tough question, but you know, how drastic has the market changed, just from your perspective? Does it feel like a fundamentally different market today than back pre COVID in January 2020?
Well, absolutely. I think that when I first entered the crypto industry, the total sort of market cap as a whole of the industry was around 30 to 50 billion. When we were first sort of founding Arkham, the industry as a whole was probably worth like 100 billion in total market cap. And now we're just below $1 trillion, right? And so the overall sort of size of the pie has dramatically increased. I know that many people are sort of, feeling a bit bearish right now, or they feel like the market has collapsed. But the reality is that if you zoom out, even from the founding of Arkham to today, the sort of price of the majors has increased dramatically, and the overall market capitalization is quite large. I think trading volumes have been somewhat depressed relatively recently. If you look at them and you compare them, they're probably somewhere around the 2020 levels. But that being said, the industry as a whole has grown a lot. There's significantly more new sort of technologies and products and things that are very interesting in terms of use cases. So that's a much larger part of the industry now. Not to mention just the fact that the market capitalization has also grown dramatically. So in many ways, I feel like the crypto industry has evolved a lot, especially even in terms of like what major players are still around compared to when we were first starting the company.
I love that you're already quoting market cap, because that to me is the first fundamental metric in crypto. At least from my journey watching crypto, market cap is sort of the most mainstream fundamental metric. And it makes sense because it is the demonstration of a cryptocurrency or a crypto project's total value. So it's such an important number to understand. And I still notice today that people often will talk about price, very, very important. But obviously, if a crypto trades for a small fraction of a price, but there are tons of coins outstanding, well, you may think it's a cheap currency, but not really, because the market cap could be extremely large. So I love that, that's how you kicked off the conversation, because it kind of shows where your mindset is.
Absolutely.
Fundamentals. What other
Absolutely.
fundamentals, before we get dive into your presentation? Actually, maybe we should just dive in, because I'm so curious to hear what fundamentals are most interesting to you. What should we be looking at? What are people overlooking or do not know about? What are your thoughts there?
Absolutely. So let's dive right into the presentation. So I think there are two sort of key pieces of data and information that investors are quite used to, especially outside of the crypto market and more in the sort of traditional financial space. The first is what we've described as these fundamentals, right? So in equities, for example, people may want to look at balance sheet data, the executive team, central bank policy, stock to flow, these sorts of things in order to get a sort of understanding of what's going on behind an asset class. And the sort of x-axis to this would be price data, right? And this is something that TradingView is intimately familiar with. This is your technical analysis, your regression analysis, looking at historical performance and benchmarks, charting patterns, support levels, resistance levels. This is TradingView's bread and butter for tooling, catering to this market in particular. Now, in terms of the asset fundamentals for crypto, I think oftentimes investors are looking at things like market cap, which we just mentioned as being very important. Looking at the overall sort of supply dynamics for a digital asset. So being able to understand, okay, is this an inflationary asset? Is it a deflationary asset? Do we expect there to be significantly more of this asset in the future, or will there be less of this asset in the future? What are the mechanisms by which it is inflationary or deflationary, in the sense that maybe in some cases some, for example, like Ethereum, portions of the fees that are generated by the network are then burned, and therefore if there's enough activity on the network, all of these burns will cause the supply to decrease of the token, versus other sorts of protocols actually have inflationary emissions, right? So they have these sort of technical specifications that as people stake, or in order to maintain the security of the network, or they lock up their tokens, or they put them in protocols or contracts or something like this, the protocol will actually mint new tokens into circulation, thereby sort of increasing the overall size of the pie, but then trimming down your particular stake in it, right? And so there's all these sort of different analyses that can be done around the supply and demand dynamics for a lot of these different digital assets. And I think that that's super important as well, right? These are all different, key things that an investor should be analyzing, or a trader should be analyzing for digital assets, not to mention everything else, such as, if the protocol has users, if they're developing new, really exciting technology. Like, all these things are very important fundamental pieces of analysis for deciding what to do with a particular asset class. Now, what we end up focusing at Arkham in particular is actually a third vertical within the cryptocurrency industry, and that's transaction data, right? So this is fundamentally the information about what entities, that being individuals and companies, are buying and selling particular assets, who are the new entrants versus existing entrants, where are the large transactions in the market coming from, again, analyzing these sort of fundamental supply and demand dynamics of, if somebody is buying, how much size are they buying? If somebody's selling, how much size are they selling? Insider activity, right? This could be a major key thing in cryptocurrency as well. So how much does the protocol hold? How much do the VCs hold? How much does the founding team hold? This is all super important information for protecting one's investments. And then naturally understanding things such as exchange inflows and outflows, and the history of the different protocols that you're actually operating on. Now, what's the issue? Well, this data actually also exists within traditional finance. However, that data is often guarded by the exchanges themselves, the regulators, the brokers who you're dealing with. I think oftentimes we've all heard the sort of news cycles regarding, Citadel, or one of these other quantitative trading firms or market makers, buying this sort of transaction data and order flow history from companies like that have broker services. I think previously people have described like Robinhood potentially as one of the companies that has allegedly sold this kind of data to market makers like Citadel. But the good news is that in crypto, this data is actually publicly available, right? But the primary issue is that it's pseudonymous. And so you're looking at all of these wallets online on the blockchain, and you're looking at the interactions that they're making with one another. But the reality is that you don't know who those people are, right? And so you have no idea, if one address belongs to the same person as another address, right? You can imagine having a set of 10 addresses that are all trading with one another. You have no idea if those 10 addresses belong to 10 different people, if it's 2 people who own 5 addresses each, 5 people who own 2 each, or if they're all different individuals and companies, right? And so what Arkham does is we actually build all of the technology that is necessary to collect all of the information that exists on chain from publicly available sources, put it through very rigorous sort of data science in order to be able to analyze it and figure out who the different companies and individuals behind these transactions are, and then show it ultimately to our set of users, right? So showing a single platform with a ton of de-anonymized sort of companies and different sorts of large market players within the crypto industry, where now you have a database of everyone who is buying and selling, particular kinds of assets, right? So many times this info can be invaluable because at the end of the day, if you know who's buying what and you know how much they're buying or how much they're selling, that is the supply and demand that will ultimately make its way onto the order book and therefore will affect price, right? So this is sort of like the main heart of the Arkham value proposition.
So I want to go back to the start of a few comments you had, because I think for equity investors, if there are any equity investors out there listening, and it's a old profession, right? We go all the way back to, say, Benjamin Graham or something like that. I did hear you mention the art and science of burning and minting, and I find those terms so interesting for, especially the newbies out there who don't know crypto that well, or perhaps are just getting familiar with equity markets. The way to look at something like those two terms, because I think they're very important, is essentially in the same way someone could dilute their stock, for example, by issuing tons of stock, or potentially issue a buyback, thus to shrink the total number of shares outstanding. Those are essentially they're the same concepts, right?
I think they are similar but distinct in a lot of ways. I think one of the ways that I like to think about it even more is more similar to something like a commodity, right? So imagine you have something like gold, and there's a bunch of like imagine Bitcoin, for example, right? So Bitcoin has a fixed supply in the same way that gold has a fixed supply, right? There's only a certain amount of it that actually exists on planet Earth. But like gold, with Bitcoin, more comes out over time, right? So with gold, you have to go through this discovery process of mining, and the same way you would mine Bitcoins. And as you go through that process of mining, more Bitcoin and gold comes into existence. But eventually, you're going to run out, right? And so with gold, we have no idea actually how much there is in the ground. I mean, we have a rough sense. Given that it's been a couple thousand years. And so at this point, we have a pretty good sense for how much gold ends up coming out every single year. And so a bunch of, commodities analysts spend a ton of time discovering either new sources of gold, trying to predict the amount of gold that's going to hit the market. And then naturally, given the liquidity and current existing sort of supply and open interest, how that might affect the price of gold, right? Or in some cases, it can go significantly more scarce if people are, such as central banks, for example, are buying a ton of it and there's not enough supply coming out of the ground, then the price can go up, right? And so, it's very similar to digital assets in this way, where, depending on the asset that you're looking at, potentially even something like Bitcoin, it can look very, very similar to these different sorts of like commodities and stuff. Now, where it gets more interesting is, obviously with Bitcoin, you cannot just increase the supply arbitrarily. Obviously, there are a bunch of other sort of tokens and whatnot where, you could theoretically increase the supply either programmatically or, if the team decides to do so. And I think that those would be, more kind of equivalent if something is not a fixed supply, but instead has sort of this rate at which you can increase the total amount of supply that will come into existence in the future. I think that would be more akin to, a situation where, potentially a corporation decides to increase the number of shares that exist.
And would you say, I love the example of Bitcoin and gold and these fixed supply. In terms of the altcoin space, which I find rather fascinating because of the opportunities out there or how vast it is, but of course the risks. Would you say that when the deeper you go into the cryptocurrency market, especially into the altcoin space, far out on the curve, let's say, that this aspect of dilution is, to me, it sort of strikes me as often overlooked, especially by new traders or investors. It's something they should probably learn rather quickly, which is how easy is it for this project to mint new supply, right? Is that a helpful tip maybe for new traders or investors out there?
Yeah, absolutely. I think understanding the supply of the asset that you're trading has a direct impact on how much of the pie you actually, have a part of, whether it's a network or whether it's a commodity or something else, right? Knowing how much can come into existence relative to the amount that you own is super important, right? And it's not just about fixed supply, right? I think some people make the mistake of thinking, oh, well, if it's not a fixed supply, it's not worth anything, because as I mentioned before, if you take an asset like Ethereum, then it's actually deflationary, right? So the amount that exists over time actually goes down as well, right? It doesn't just go up, right? So the total sort of net amount of Ethereum that you own relative to the total amount of outstanding actually proportionally increases by percent as the total amount of Ethereum continues to be burned, and sort of decreases while the amount that you own actually stays the same, right? And so I think that these principles are pretty interesting for people to understand and to actually analyze when making these sorts of decisions. But nevertheless, I think people should be very careful on what it is that they're choosing to buy and invest in, and actually use when it comes to the crypto asset class.
And in terms of speaking about supply or burning, minting, or in terms of its relation to commodities or equities, how much deeper does it go in crypto? Because as someone who is familiar with crypto, has been in the industry for a while, especially followed it, but has never actually dove very deep into the fundamental aspects of crypto, I'd love to hear what other data is out there.
Yeah, so I think going back to what we were discussing before, I think that I wanted to give a particular use case for how people can use the sort of data that I mentioned from the Arkham tool
Love this.
earlier in order to understand more from a particular example. So this is a famous asset called Uni, which belongs to the Uniswap protocol, which is a decentralized exchange. So if you don't want to use a centralized exchange, you don't want to custody somewhere, but you still, are interested in swapping a cryptocurrency for another, you can use a decentralized protocol such as Uni in order to do it in a non-custodial fashion, meaning you don't have to deposit onto it, but instead can just have your own self-custody and then trade one asset to another. Now, what's interesting about this? Well, if you were to investigate the documentation that Uni released, you can actually see the amount that has been allocated to different portions of the protocol, right? So it says 60% to Uniswap community members, 21.2% to team members and future employees, 18% to the previous investors, and 0.69% going to the advisors, right? And so the interesting thing about this is they denote the amount of Uni that actually exists, right, and is being held in these different wallets. And so you can use a project like Arkham or tools like Arkham in order to actually track down where these assets are held on the actual blockchain, right? So you can see, okay, well, this is the wallet of the CEO. This is the wallet that is, belongs to the community members. All of these wallets belong to investors, so on and so forth. And then you can actually set alerts over time for when these get unlocked, right? And so all of these come with a vesting schedule. As you can see, like team members, future employees, investors, advisors, they all say with 4-year vesting, which means that the tokens do not get unlocked and have the ability to be sold all at once, but rather they actually unlock over time, right? And so overall, essentially what this gives you the ability to do is understand what supply is going to be hitting the market in the relatively near future in a way that means that it might be a good opportunity for either hedging one's position or potentially going on the short side if you think that the newfound supply might depress the price and so forth. And obviously this isn't any kind of financial advice or endorsement of any sense
No.
for any of these digital
All
assets.
education, yes, all education.
Exactly,
here.
but it sort of helps to understand the supply and demand dynamics and what sort of tools you can actually use to keep yourself protected and so forth. But this is like one of the more interesting use cases for Arkham.
Yes, very interesting in that regard. And as even I'm watching this, listening to you speak and watching this presentation, I am thinking about how this is such an area of crypto that really needs to be, as far as I can tell, more widely taught, actually, because you want to know the fundamentals of what you're buying or what you're following or what you're interested in. Seeing a tweet, seeing a post, that's great, but you don't just want to go rush and buy that. Understand exactly what makes that up in the first place. And
Absolutely.
I think that this is exactly what people should be thinking about. And it's also interesting to see the distribution, just to see how various groups of people within the community are rewarded. For example, in this case, seeing that community members got up to 60%. I actually don't know trends if that's a lot or a little, but that seems quite notable, actually.
It's a lot. It's a lot. I think historically, on average, it's been significantly less than that. But 60% going to the community is quite a lot relative to other projects in the space.
Very interesting. Yes, that caught my attention. And how about in terms of, so if you happen to be one of those community members, how do you, how much deeper does the data go in terms of your returns, or what piece of revenue, that you could potentially capture from the project? Does the data goes deeper, of course, than holders, right?
It does go deeper than holders. The interesting thing is that for a lot of these assets, including Uni, there isn't actually very much that you're necessarily like entitled to, right? I think so far the only thing that users are actually entitled to if they hold Uni is to participate in the governance structure. So they have this sort of decentralized governance forum where people can make proposals and then vote in accordance with the amount of Uni that they hold. And so you can kind of vote on the direction of where the product should be going, what things should be built, how the money should be used from funds that are raised and so forth. But from my understanding, there's actually no sort of like monetary direct incentive from actually holding the tokens, which could possibly be also for regulatory reasons, right? And so I think in general, the number one thing has always just sort of been using this information and using the data to try to understand the supply and how that might be affecting sort of like the economic incentives and financial direction of the asset. But otherwise, it can mostly only be used for governance.
So interesting. Governance, I found, is another area of crypto that I've yet to really dive into, but I want to, because once again, just want to relate it to equity markets, because for me or potentially other listeners, it's a easier example to find. Is you think about let's say like corporate raiders, or people who take board seats and then have more control over a corporation, or can actually move the corporation that benefits maybe their holdings or their shares. I often wonder about that with crypto, and I've yet to see a really fascinating example, but I'm sure it's not far off, of someone, for example, really taking control of a project through governance. Maybe they never were a founder or anything of that sort, but they found a way to get in. And
Right.
I'm not sure what they would do from there, but it's interesting to me, I must say. Is there any data around that? Have you seen anything interesting in that regard?
I don't think that there's been any sort of like corporate raiders or sort of Paul Singer style, interventions in the decentralized governance space for different projects. I know in some cases there's been like project takeovers and that kind of thing. Generally, it's done by other employees who kind of collude and come together in order to take over a project. But I think at the end of the day, especially with the sort of decentralized governance, there is a sort of team at the end of the day that is actually in control of the protocol itself and can make very crucial decisions about the direction going forward. And so, even if you're a token holder and you make these certain proposals about what should be done with the treasury or with the product and so forth, if you don't actually have physical control of the treasury or the product, you're going to have a really bad time actually trying to get anything done. So I think for that reason, there probably hasn't been very much.
Makes perfect sense when you put it that way. And what I would add to that, though, is it does, at least as far as I could tell, unlock another important part of fundamental research in crypto, which is understanding the governing docs. Of course, it's not numbers, it's not quantitative, but knowing what type of docs govern the project is an art and science of fundamental research, true for many different asset classes as well.
Absolutely. Yeah, I completely agree. I think that for a lot of people who are coming into the crypto space for the first time, one of the initial things that they will read as a piece of diligence or research is, like the white paper, for example, right? And that will primarily go in depth in terms of, this sort of information about, the governance and what it's going to be used for and the utility and how the token sort of fits into the broader ecosystem of the project.
Totally. And how about in terms of the presentation? I'd love to see more in terms of what you have prepared here, or other
Well,
examples.
Well, here we have the most important part, which is, our collaboration with TradingView on everything, and the fact that now you can access TradingView directly within Arkham. And so I think as part of this, we wanted to give a little bit of a demo here, so that people can actually get a sense for what users can do and how they can use TradingView on here. So this is the Arkham platform, and this is how people actually get access to information about what's going on here. So say, for example, I go into our search bar and I search Ethereum. Then I go on. I get a sort of holistic breakdown of everything going on with Ethereum. I'll pop over to the TradingView tab here. And now, of course, you can come in and get significantly more information, change your candlesticks around, add indicators, etc., and actually go to TradingView directly afterwards. But the cool thing is that as you're doing your technical analysis and trying to understand as much as possible about, volumes and where the price is heading and where each one of these candlesticks is closing for these trading pairs and so forth, you can actually come in and then look at all of the information surrounding the broader asset that you're analyzing. So you can see where the most Ethereum has flown into on the blockchain. So obviously a lot has gone into the wrapped Ethereum contract, Arbitrum, which is one of the layer twos, Binance, which is one of the largest exchange, and of course Uniswap, because people have been moving a bunch of Ethereum there.
And that's very interesting because I see that has 1 hour check. So that's just in the last hour you can track.
This
those
is in
flows.
the past hour, correct. We have the
Super
past
interesting.
hour.
How would you
hours,
think about
1 week.
this in terms of if you were to see an outlier? Is there something that comes to your mind in terms of, whoa, that's a big deal? I'd like to figure out what's going on there.
Yeah, absolutely. And people go and they set alerts. We have an alert button for this kind of stuff where, if a certain amount of an asset is moved in an anomalous way, you get notified that that's going on. And then obviously you can go on and investigate and see if it's a, positive or negative thing, bullish or bearish. And then people use this in order to try to get an edge on the market, right? Same thing for all these top holders. So these are the largest holders of Ethereum. So the largest holder of Ethereum is actually the ETH2 beacon deposit contract. So people, actually staking. But then additionally, you have these really big companies like Binance, Kraken, Robinhood, Coinbase, et cetera, a bunch of these exchanges who are holding a bunch of customer funds in this native Ethereum here, right? This is one of the co-founders of Ethereum, for example. Right. So one of the co-founders of Ethereum, you can actually go in and look at his portfolio in real time, right? He holds 150,000 ETH, right? So if this person is making a very large move, it looks like they use a lot of Kraken. They've deposited $240 million onto Kraken before. You can go here and you can actually, look at the outflows on here. Last time he sold Ethereum or moved it onto an exchange, we don't necessarily know if he sold, but it's pretty common for people to deposit onto an exchange to sell. It was $41 million of Ethereum 4 months ago, right? And I can click here and get the exact date and time, right? This was June 5th, which you can see here on the graph as well, to actually get a sense for where a bunch of this was actually happening and where on the graph it went, right? So you get a really in-depth understanding of these assets and who's holding them. You can even actually visualize the actual holders themselves to get a sense for who the largest holders of Ethereum are in a more kind of visual sense, right? You get a visual representation of the ETH2 deposit contract versus Binance versus Robinhood, and then sort of the smaller top holders. Obviously, Vitalik is in here as a very large holder of Ethereum as well, and you can click on his profile in order to get a better sense for everything that he's doing with Ethereum. But it's not too uncommon for people to have set alerts for activity from people like Vitalik, because if they're starting to sell or depositing on a particular exchange or something like this, it's incredibly important to know this in order to potentially hedge your position or take a different position in the market.
And I've got a few questions brewing here that I'm sure other viewers or listeners are thinking too. The first one I want to ask is top counterparties. Tell me about top counterparties, and the reason why I ask is because there's this excellent concept out there in trading where a lot of new traders and investors often forget that every time they press buy or sell, every time they transact, there is someone or something, maybe it was an algo, but still coded by someone else on the other side of your trade. And if you keep that in mind, you'll remember that someone is doing the opposite of you. Thus, do they have better information? What do they know that you don't? It's sort of a way to remember, maybe to be a little more cautious. So I'm guessing top counterparties, is that what this is representing? People that are being traded with, I suppose?
Correct, or funds have been sent to, et cetera. So here we're looking at Vitalik's top counterparties. The number one is the burn address, where people send tokens in order to take them out of circulation. He has a pretty big set of transactions, about $1.66 billion with the Crypto Relief Fund India, which I believe is where he sent, he received a bunch of Shiba token when it was initially created, and then Shiba obviously became very popular, and so he donated a bunch of it to the Crypto Relief Fund. Gitcoin, a lot of these are donations. It seems like GiveWell and so forth. And then some of these, like for example, Uniswap, then there's 1,000 transactions on here. This is more so, the selling, for example, right? This is like, oh, I'm moving this much of this particular token in order to then, sell it and get access to something else. Looks like in the past he's used Kraken exchange, right? So potentially if you're, buying Ethereum or something on Kraken, Vitalik is on the other side of this. The Ethereum Foundation, of course, he's had some transactions with FTX, dangerous counterparty on that one. Hopefully he didn't lose any money on this. But yeah, it's very interesting to go through and actually see, who are all of the different people who somebody is interacting with on chain. And, obviously before we visualized, the Ethereum market, but you can also visualize Vitalik and see everybody who Vitalik has interacted with or sent tokens to or received tokens from as well, right? That's the whole point of being able to use a system like Arkham in order to visualize all of the movements on chain. So it's a super powerful tool for people to use.
And for the new traders, the new investors out there, because they're out there and they are interested in markets, they want to make better decisions. This is on-chain analysis, right? This is what you're demonstrating right now. Maybe you could just tell people a little bit more about on-chain analysis. Give them an exact definition. Especially there might be experts out there who literally have the wrong definition.
Yes, absolutely. I think that the sort of meaning of on-chain analysis versus something like technical analysis is you are looking at data that primarily exists on the blockchain that can then be analyzed to try to understand ultimately where tokens are being moved. That is fundamentally what on-chain analysis is. It is the study of blockchain information in order to understand the timeline of how coins on the blockchain have moved over time. And then as a trader, you can use that information to then, inform your decisions about how the market is going to be impacted based on those movements.
Yeah, makes total sense. And it's still to me an emerging industry. So from your standpoint, do you feel like it's just getting started, this art and science of on-chain analysis? Does it still feel like inning 1 or inning 2?
Yeah, I think we're still in the early innings. I mean, I think the total net number of people right now is in the single digit millions to maybe 10 million people doing on-chain analysis. But industries like technical analysis, for example, have hundreds of millions, right? There are hundreds of millions of people who are looking at these charts and prices in order to understand, whether something is going to be going up or down, right? And so I think that the market as a whole can continue to grow. I think there's going to be more products. I think that there's going to be, more interesting features for people to be able to do diligence using on-chain analysis. And I very much look forward to Arkham being at the forefront of that.
Fantastic. And for those who want a tip or two, if there's a on-chain analysis tip that you've come to really like, or that you found is an interesting, data point that you check in your daily routine, does anything come to mind? Maybe 1 or 2 tips or concepts that viewers could walk away with and go try, in the next 30 minutes?
Yes, I would say the 2 most important things are to use Twitter and follow the on-chain analysis accounts, which would include Arkham, right? They're constantly posting stuff about things that are going on in the market using on-chain analysis. And the second sort of more kind of direct tip would be to always look at the insider supply and understand what the team is doing, because the team has a bunch of information about what's going on with the project.
I love that. Absolutely love that. So do you think that not enough traders and investors are following what the team is doing? And is there alpha there potentially? Or maybe not alpha, just at least some sense of us,
I definitely believe people are not analyzing nearly enough about what's going on internally. I mean, even in the equities market, for example, people are required to make disclosures every 90 days if they're an insider of a large holder of a project. But the good news is, in the crypto industry, you can actually see everyone's blockchain wallets on projects like Arkham, right? And so you don't need anyone's permission, and certainly not an SEC filing in order to get access to the information. So I think there's very much of an edge there.
It's so cool, the open nature of that, and it is refreshing. And regarding insiders, just one thing I want to add to the conversation is there's an old quote that's gone around trading and investing circles for a while, which is watch what they do, not what they say. Because
True.
often, right? Because oftentimes you have people at the heads of a project or a company saying very bullish, amazing things, but under the surface, if you dive in, you'll see that they might be doing things that are totally contrary to what they're saying.
Could very well be.
So it's a super interesting data point. Well, Miguel, let me say this. I know that we're crossing that we're nearing that 40-minute threshold of this conversation. Are there any final interesting tidbits that you want to add to our viewers before we wrap up? I think that one interesting thing it would be great to hear from you on a little bit more as well is, and I don't know if you want to comment on this, but are there any crypto projects that you particularly like or that you follow closely on a watch list? That maybe you don't want to disclose that information, but
Bitcoin.
Bitcoin. Got
Yeah,
it.
Bitcoin. To be honest, that's the only one I can give a real endorsement to. I really like Bitcoin.
Great.
But that being said, I think the number one thing that I could tell the viewers is I'm super excited about our partnership with TradingView, and I'm very excited to be able to give Arkham users access to these tools in a more sort of real time way for them to continue to do better analysis. And I look forward to growing more of our collaboration.